Hello and welcome. This is Agam Vakil and you're watching Markets IQ on NDTV Profit. Let's take a quick look at how the markets are faring at this point in time. Well, we are looking at a lot of weakness which has started seeping in as far as the Nifty is concerned. We're looking at a decline of around 0.8% for the Nifty, and the Bank Nifty is also declining by as much as 1.6%. A lot of this pressure is largely on account of HDFC Bank, which has in fact weighed down on a lot of benchmark indices. Remember that today is also Fin Nifty expiry, and well, it is in fact also weighing on the Fin Nifty, the way things are looking at the moment. In terms of the key gainers in today's day of trade, as far as what the overall markets are concerned, is Cipla, which is up around 6.6%, and Sun Pharma 3.5% gains. So it is the pharma pack essentially which is leading the gains and perhaps providing some amount of support as far as the markets are concerned. But on the other hand, we do have a lot of weakness in the likes of well, the banking space in general. So IndusInd Bank is down 3.4%. We have weakness in HDFC Bank, which is down 3%. Axis Bank is down 3%. And State Bank of India, which is also under pressure to the tune of nearly 2.8%. The question is that when we do have so much weakness, is there any sort of respite which is expected? And at the moment, it does seem like there is none, because we just moved from one low to another. And while the day of Saturday may have provided a little bit of relief to those who are long in the Nifty, the Bank Nifty, there was none. And in fact, we're seeing further pressure as far as the Bank Nifty is concerned, which is down around under pressure now by around 1.5%. If you consider the broader markets too, let's take a look at that and how things are panning out there. At least, so 1.8% decline there as well as far as the mid-cap index is concerned. The small-cap index, only marginally outperforming. And naturally, in the mid-cap index, we have Z Entertainment, which is down around 26% at the moment. We're going to cover quite a bit around Z Entertainment. Of course, the slower circuit has opened up now, but it's still down 26%. Overall, Realty is the other one, where we have seen, well, a decline of, 50% in profit. Pardon me. And that's where we are seeing weakness because of the profitability. You do remember that a lot of these real estate companies were priced to perfection, had run up significantly over the course of the last 6 months and 12 months. IRFC is down on around 7% now, so about a profit taking coming in there as well. This was again one of the bigger movers and has been off late. Prestige Estates down 6%, along with something like a JSW Energy, which is also down and under pressure at the moment. So markets at the moment, this Tuesday morning, not looking good, coming off, a slightly misplaced weekend where we had a working Saturday, but Monday was off. And that's how things are panning out as far as the markets are concerned. But, I want to also very quickly address what's happening with the solar companies. So let's take a look at what's happening with Tata Power. Pardon me. Tata Power is up and about for now, at least is maintaining its gains. Borosil Renewable is the other one, which is also gaining quite substantially today. In fact, Borosil Renewables is up as much as 15%. Vari Renewable is the other one, which is also in the green. So there's a pocket where there are some gains as far as markets are concerned, but on the whole, the market breadth is not looking good. But since I have been talking about a whole host of solar companies, we have Prime Minister Narendra Modi has announced setting up a new scheme to electrify 1 crore households with solar electricity hours after the consecration of the Ram idol in the temple of Ayodhya. PM Narendra Modi cited divine inspiration as the reason behind this announcement. Right. So, in fact, we spoke to IREDA CMD Pradeep Kumar Das on the macro aspect of the Suryodaya scheme, and he expects an outlay of 1.5 lakh crore rupees. This is what he had to say with respect to that particular sector. Listen in.
Honorable Prime Minister's announcement post Pran Pratishtha Utsav of Ram Temple in Ayodhya for solarizing 1 lakh crores of rooftops. So that is again going to further sensitize and improvise the awareness level and the responsibility of every citizen. So let me first touch upon that macro aspect. So this 1 crore rooftop solarization will enable a outlay of 1.25 lakhs to 1.5 lakh crores. And if you take out the support of Government of India through subsidy part of it, around 1 lakh crores of debt component is going to come there. And if you see, by and large, our entity being the largest and most experienced entity, and today having around 20% of the capacity, installed capacity in the country support. So we are envisaging around 25 to 30% space we will continue to retain. And we have already opened a dedicated division for addressing the business support for the retail space. Not only this rooftop solar, even Kusum scheme we have already started doing. Already 2 schemes were 2 sanctions we have done in Kusum. In the time to come, through this retail division, rooftop solar and Kusum, as well as other MSME and SME category of renewable energy requirements, financing, we are going to do that.
And now we have my colleague Vikas, who is joining us to give us a lot more in terms of the latest on the launch of Suryodaya scheme. Vikas?
Yeah, hi Agam. As you rightly said, and even what the IREDA chief said, so according to our calculations, what we were looking at, since details have not yet come out, so if every household takes or consumes close to say 1 kilowatt hour of capacity, so that would require a total installation of close to 10,000 megawatt, and an investment at 5 crore rupees per megawatt, it would be close to 50,000 crore for the initial this 1 crore households that the PM has spoken about. So based on that, all the top companies, especially solar panel manufacturers, be it Adani Power, now Reliance wants to enter into it, and even JSW Energy, Adani Solar, Tata Power, they all are going to benefit out of it. And if we are looking at only rooftop, so right now India's total installed capacity in rooftop is around 12.5 gigawatt, out of which rooftop solar for residentials is only 2.2 gigawatt. So this would be an additional 10 gigawatt of new capacities which will come up for rooftop solar segment. Even the poorer segment of people who have not been able to purchase power, so they can benefit out of it through economical power, and also surplus power can be sold on grid also. So that's how also they are going to benefit out of the scheme. More details are awaited, and after that we can come out with more perspective on it.
Right, Vikas, thank you so much for getting us that update on the potential launch of the Suryodaya scheme. But we move on and talk about HDFC Bank. Now, over the course of the last 1 month, it has lost substantially, and it's currently trading at its lowest levels since about a year and 4 months, a little over that. In fact, the first time HDFC Bank hit the mark of 1,400 rupees per share, that is around where it is, was back in November 2020. So from November 2020, if you were invested in HDFC Bank, and if you had held the shares of those banks today, you would have made zero returns. This, of course, is the consequence of the sharp correction that we've seen in HDFC Bank since it's come out with its earnings. And there is no letting up when it comes to the selling pressure on this particular large private sector bank. My colleague Vishwanath Nair, who's tracking the story, is joining us to give us more on this. Vishwanath, good afternoon.
Good afternoon, Agam. So, as you rightly said, there is a result-related sort of fatigue that's coming in with HDFC Bank. The numbers were largely okay. However, there were some disappointments with regard to return ratios, specifically the net interest margin, the earnings per share falling for the first time in over a decade on a year-on-year basis. A lot of this has resulted in a bit of a sort of a negative view on the stock itself. Now, according to CLSA, when they spoke to about 20 investors who form a part of the portfolio, they saw that the domestic investors are seeing far more negative sentiment on HDFC Bank than their foreign peers. And this is largely coming on the back of what they believe an unrealistic loan growth versus NIM trajectory that the bank has laid out. The bank is aiming at about 15 to 17% loan growth. And what the domestic investors believe is that it's impossible to have a 15 to 17% loan growth and also maintain a net interest margin. If you want to do that, you need to have a deposit base, annual addition of deposits of about 4.5 to 5 lakh crore. And if you want to achieve that, then obviously you need to play the deposit rate game. If you want to do the deposit rate game, then obviously your net interest margin is going to get contracted at some point in time. The polar opposite of that is showing up on the foreign investor front. What the foreign investors are telling CLSA is that the worst seems to be over. What they are estimating is that the merger benefits are going to play out in some time. CLSA also says that the bears to bull ratio with the foreign investors is lower than the domestic peers. Overall, what we do, however, see is that the stock has dropped significantly. It hit a 52-week low today. When this selling is likely going to stop, that's something that I'll let you and the rest of the market determine. But at this point in time, things are looking a little shaky in investor confidence on HDFC Bank.
Right, Vishwanath, thank you so much for joining us and getting us those insights on HDFC Bank. Of course, everyone's been waiting on that bounce. Everyone's been waiting on that that bout to short covering as far as the banking index is concerned, and really HDFC Bank hasn't helped that cause. Well, it's going to be a wait and watch on that one. But on that note, it's time for a short break. But up next, we talk about Zee Entertainment hitting one lower circuit after another, even as Sony calls off the merger, and a lot more on the other side. Stay tuned in. Welcome back. You're watching Market IQ, and we're going to get you a lot more in terms of what's happening with Zee. But before that, a quick look at how things are faring. And there's been a little bit of an arrest in the sharp fall that we've seen since morning, but we're still trading well into the red. We're currently looking at a 0.8% cut on the Nifty. And the Bank Nifty is also declining by around well over 1%. In fact, at the moment, 1.6% declines there. The real challenge is that today is also the Fin Nifty expiry. And HDFC Bank comprises a huge component of the Fin Nifty. It in fact is also as much as a third of the Bank Nifty weightage, which is why we're seeing no relent as far as, well, any buying action which potentially could have resulted in some short covering that really hasn't come through. And there were a lot of hopes pinned on a whole host of several other private sector banks to perhaps advance in today's day of trade and maybe, just maybe, capture the weakness in HDFC Bank. But there is no relent, and the selling pressure for now is on, even though we've seen that little bit of an arrest when it comes to slide on an intraday basis. Well, the question really is that where do we go from here, and what do we expect? That's only something that we will know eventually down the line. Let's also very quickly take a look at the broader markets. We are looking at the mid-cap index, which is also down around 1.8%. So that is certainly underperforming and falling more than the Nifty. And the small cap index is also down around 1.5%. So that's as far as your broader markets go. But, you know, we were talking about Zee Entertainment, and we now have an NDTV Profit exclusive on Zee and Sony merger collapse. Tamanna is joining us. Tamanna, what are you gathering from your sources here?
Remember, we broke this story first on India Market Open, before markets opened, and you've seen the tumble in the stock. Now, what are the exclusive details we have? It's about how this negotiation, which went on really for 3 years and 4 months, finally ended despite a 1-month extension. Remember, till about 20th of Jan, good faith negotiations were still on between the two parties. But at the end of it, it came down to 3 rejections from Sony's side that actually pulled the plug. First, 2 rejections of proposals from Zee, and the 3rd rejection on a request for extension of timeline. So first, let's tell you what the 2 proposals were. The first proposal by Zee, and remember, these details you saw exclusively first on NDTV Profit, was that let the merger go through as approved by shareholders, which meant the merged entity would first begin with Puneet Goenka at the helm. But going forward, there would be a conversation, they'd sit across the table from each other and actually negotiate the hunt for a neutral CEO, one that would be acceptable to both sides, Zee and Sony. This proposal was rejected by Sony. Let's come to the second proposal, which was that Puneet Goenka will step down. And this is important because that was the bone of contention. Sony ostensibly did not want Puneet Goenka at the helm of affairs. So he was willing to step down, but what Zee was asking for was a board seat for Mr. Goenka or the promoter family / a nominee. So 1 board seat. Remember, at this point, they have just 4% share in the company. This also was rejected by Sony. So what was acceptable? What was the combination acceptable to Sony? It was flat out that Puneet Goenka goes, there is no board seat, and NP Singh becomes the head of the new merged entity. That is really where the negotiations broke down. But what the market will also look at is what happens next, because the story is not ending here. Zee is surely headed to court, and a legal battle is the next leg of this entire story.
But meanwhile, perhaps on expected lines, we have brokerages which have downgraded the stock with target prices going as low as 170 rupees per share. Mahima joins us to give us more details here. Mahima, good afternoon.
Good afternoon, Agam. So before I move to brokerages, it's worthy of mentioning that today Zee has lost a market cap of approximately 6,600 crores, and the shares have fell more since 1st October 2019. Now, talking about the brokerages, we've seen that multiple brokerages have either given sell rating or downgraded their rating for Zee, and their target prices range between 170 to 200, and at present we're seeing that the shares are trading at below 170. Now, if you talk about individual brokerages, Motilal Oswal has said that they do not expect a recovery in terms of earnings in the near-term future. If we talk about Citi has said that the valuation multiple will trend substantially lower in the coming future, and they cut the FY 24 to 26 estimates to 22 to 38%. MK on Zee Entertainment is saying that they've downgraded due to weak competitive positioning and escalated corporate governance issues. Then we had CLSA that said that valuation is likely to decline to levels seen prior to the merger announcement, and the stock is derated because of the share pledging, the promoter share pledging prices and fall in business cash conversion. No Nuvama also came out with a report saying that the near-term valuation to stay suppressed due to Sony seeking a termination fee. We also had a Nilara Capital report on Zee Entertainment, which said that there could be a possibility of any financial partner buying majority stake, and this could provide a respite for Zee. Lastly, if we see Zee Media Corporation shares have also seen a fall because of this, and they've fallen as much as 17.4%, and this is the most since January 28th. So the brokerage's overall view says that sell off Zee and the target price range between 170 to 200.
Right. Mahima, thanks so much for getting us those updates. None of those price targets are over 200 rupees per share, so please bear in mind with that. And of course, Zee Entertainment currently trades where it does, but it's going to be a challenging recovery. The biggest and the highest target out there, at least on that list, is 198 rupees per share. So while it currently trades at 170 rupees per share, it's going to be hard moving in. But let's shift focus then to the telecommunications sector. And the board of Bharti Airtel has approved the initial public offering of its subsidiary, Bharti Hexacom. Bharti Airtel is one of the 3 telecom majors of India, which owns 70% stake in Bharti Hexacom, whereas the balance 30 is owned by the government. We have Smriti, who's joining us to give us more updates. Smriti, good afternoon.
Good afternoon, Agam. You rightly mentioned about that the 70% is owned by Bharti Airtel and 30% by the government, essentially. Now, government holds this stake through Telecommunication Consultants India Limited, which is a PSC. And now government is going to sell 20% of that 30% stake. So it's an offer for sale. There's no fresh issue of shares, and the proceeds will go to the government. There are 1 crore shares that'll be up for sale in this one. And just to know a little bit about what Bharti Hexacom does, it provides telecommunication services in Rajasthan and the northeastern states of India. If we look at the financials of the company, the revenue of FY23 was around 6,500 crore versus 5,400 crore in the previous year. Profit was 549 versus 1,674 crores. Now, this is a difference because of an exceptional loss. There was a trade settlement with a group company. So basically a Bharti group company only, there was a settlement. So which is why there's a difference in such a big difference in profit in these 2 years. The margins, quite healthy margins there, 44% in FY23, an increase from 35% in the previous year. That's where we currently stand. We're looking out for more details on this, and we'll keep you posted on all the updates.
Right, Smriti, thanks so much for getting us that one. It's certainly going to be a very interesting IPO to keep an eye on, especially from the telecommunications space. But we move on, and we talk about Axis Bank, which will report its earnings today with an expectation of improvement in net profit as well as net interest income. We have Mimamsa Verma, who's joining us to tell us what we can expect from that particular bank. Mimamsa.
Axis Bank is set to announce its Q3 earnings results on Tuesday, where it is expected to report a nearly 5% increase in net profit on year-on-year basis. Now, YOY figures are not comparable for Axis Bank this quarter because the Axis Bank acquired Citigroup India's retail operations in March 2023. On a sequential basis, however, the net profit is likely to rise by 4.5%. Now, what Kotak Institutional Securities Equities is saying that the rise in net profit is likely due to a favorable loan mix towards higher yielding loan segments as seen in the recent quarters, especially after the bank acquired Citibank's consumer business. The net interest margin may decline by 10 basis points on a quarter-on-quarter basis due to higher cost of deposits. The net interest income is expected to remain stable sequentially and rise by 8.7% year-on-year. Overall, asset quality is likely to remain broadly stable, but there can be minor slippages on retail loan front. So provisions may be on the higher side on account of expenses related to the acquisition deal worth 12,325 crore rupees. This amount, however, will be spread across a few quarters. So the key focus for Kotak Institutional Equities this quarter will be the integration with Citibank and the progress on net interest margin. Now, what BNP Paribas is saying is that the net profit will be be boosted because of the provisions and capital buffering and the robust deposit franchise that the bank has got after Citibank's acquisition is going to help bank to prop up its retail portfolio. The bank has also shown willingness to grow its rural and small banking business, which is likely to boost the loan growth. But on the bank's net interest margin, that is going to see the fastest impact compared to to its peers, because in case there is a rate cut by the RBI going ahead. Similarly, on the rate of return on earnings is going to be above 18%, partly due to the low credit costs. One interesting bit is that that Axis Bank's short-term borrowings is at 16% of NDTL as of FY23, which is significantly higher than its other private lenders. So the margins are vulnerable in case the RBI does not cut interest rates on account of changes in inflation or India's external account dynamics.
Right. Thanks so much for that, Mimamsa. And with that, it's time for a wrap. But before we do that, IDFC First Bank is trading lower today, and the bank's net profit jumped 18% year-on-year on high income, whereas asset quality remained flat. And we spoke to V. Vedyanathan, the managing director and CEO of the company, earlier today. Here's a slice of that conversation. Thanks for watching NDTV Profit.
Our OPEX was a little higher than what it should have been, about 70 odd crores. So on a post-tax basis, let me call it about 40-50 crores. And I think we probably did a little below par.
Okay. Just trying to get a sense of the elevated provisioning number as well. That's about 45%. I wanted to get a sense as to where this provisioning has gone in, because you mentioned that AIF was not a problem for IDFC First.
No, of course, we don't have any AIF exposure. But the provisions basically last quarter, same time, the recoveries from COVID write-offs were coming, while now that has ebbed off. So think of this as more normalized times. And even these numbers are like 1.3% credit loss to average book. We already guide for 1.5. So it's absolutely normal. You should expect these sort of provisions every quarter now, because that's the nature of the model.
Right, sir. On the net interest margin front, you've reported a 10 basis point upward move on a sequential basis. I just wanted to get a sense, you're already on the higher end of the NIM bracket. A 10 basis point improvement would mean that basically your lending yield is significantly higher than what the rest of the industry is working with.
Yeah, it's very simple actually. Last quarter we dropped our rates on savings accounts from 4% to 3%. For up to 1 lakh rupees. So that obviously helped us in improving the margins. We feel it is stable here. We don't see any concern on this front. And the good thing is that this, with these margins, we're also getting very stable asset quality. So as a combination, it should be seen. Our gross NP is only 1.45% on retail, SME and rural, and net is only 0.5. So good asset quality with good yield. It's a good combination. I think it's a unique position to have in the industry.
Okay. During the quarter, you also gave a 5-year guidance. Now, guidance 1 point was done. Now you're looking at the second 5-year period. Tell us a little bit about the numbers that you've listed out in your releases. 20% balance sheet growth. You're guiding for about 17-18% ROE. Looking at about 1.5% on the gross NPA. I think 0.4%, less than 4.4% on the net NPA. How are you achieving these numbers?
We have put reasonably achievable numbers in our opinion, because what we've done is we've just assumed that the loan book will grow by 20%, which in this country growing 20 is not difficult. We're already growing at 25. In fact, we'll slow down to come to 20 if at all we come there. So, or as we go there. So that should be a loan side. Deposit was assumed only at 24.5%. So we feel it's easy to achieve because already growing at 40. So if we just meet these two numbers, the loan book at the end of 5th year by our